So when you start looking at annual income, and this is the point where supplementing something like the SCHD could replace a big chunk of your Social Security income. And that is exactly my plan. So looking here, we have year one, you can see $1,151. When you think about that, you're making about $100 a month. So when I kind of break it down, that could cover my internet bill, that could cover my phone bill. What exactly is it going to look like to the point where I can flip on this SCHD switch and essentially start earning money from the SCHD that is coming as dividends? Now, of course, there is tax liability, but when you start looking at the ability to go probably the next 10 or 15 years with a dividend reinvestment, and you'll notice the difference here, the drip or the dividend reinvestment is going to compound. And that is why you see the big growth over the non-drip, because this is taking the actual income itself. And then when you start looking at this going up, that is the reason of the dividend growth year over year that the SCHD does focus on. So when you start looking even at 10 years from where we are right now, you're going to be looking with reinvestment about $4,000 a year is where we're getting up to. So again, thinking bigger picture at $4,000 a year, even if we invested, which we are investing on a very regular basis, if we could get this up to $5,000, $6,000, $7,000 a year, that is going to cover a lot of costs, especially when you have a mortgage that's paid off, you don't have very many expenses. And that is what I want to do essentially, is get to the point of dividend income that it's covering all of my expenses. Then, of course, when you talk about capital gains tax, not going to have to worry about that because you don't have much earned income if you're not working at that time.